Hi, Dean Jenkins from FollowMeTrades.com here with the market update for the week coming up of October 25th, 2015. Well, this is still a remarkable rally in a bear market, and I still believe that that's what it is. I had said last week that there's really a two-step thing going on here. That if prices went up above this dashed green line here, that was kind of a warning sign that maybe the bear market thesis that I've been working off of is wrong. And then I also talked about this trend line. I'm not sure if you can see it on your screen, but I'll kind of highlight it here. There's a trend line that my software is drawing, and it's right here. So step one was breaking through this. Step two would be breaking through this trend line here. And if that happens, then there's a really good chance that the market could go on to make new highs. I still think that's a low probability scenario, and I don't think we will make it up to that line. I really didn't think we would make it up to here either. This rally is really being driven currently by corporate earnings. Some big companies like Amazon and Google and Microsoft have come out with some. They beat analyst expectations. They had better earnings than people expected, and so there's some enthusiasm in the market about what's going on with earnings right now. Just because there's some enthusiasm about earnings doesn't change the bigger picture that we've been in a bull market for 6 years. It's getting very mature, and the Fed is poised at some point to raise interest rates and slow down growth to meet their objectives of controlling inflation, to try out and be out ahead of that. And there's really kind of a confusing. There's so many variables, and they're conflicting right now. On one hand, last week there was housing information that showed that the housing market in the U.S. is heating up, and that might lead the Fed to raise interest rates. Overseas, there's all kinds of stuff. The European Central Bank is injecting some more stimulus, and China's injecting stimulus, and all that going on. It makes a really confusing picture, and people are really guessing, trying to guess, what the Fed's going to do, what the market's going to do. And it's, I pay attention to those headlines, but they don't drive my trading decisions, my investing decisions. I really pay attention to the realities of the charts, which reflect all the available information and how investors are responding to that. And right now the charts are still showing that we have begun a bear market, and that it will resume at some point. Interestingly, I talked about the Fed interest rates. In terms of analysts who think the Fed will raise rates this year, it's down to single-digit numbers. It was 70% back before September, thinking they would. We're down now into 5 or 6% who think the Fed will. Now, there's a big meeting coming up Wednesday of this week, October 28th. The Fed will give an update, and they even could announce that they would raise rates at that meeting. People don't expect that. But the Fed is on record saying they expect to raise interest rates this year. So people will be watching that report on Wednesday, the 28th, really closely, and looking, between the lines and the nuances of the meaning of the words and all that stuff. So there could be some volatility around that release. On Monday, there's more home sales information coming out. Tuesday, durable goods. Wednesday, the Fed meeting. Thursday, jobless claims. And Friday, personal income and outlays. So a lot of economic reports plan to come out this week, which will probably drive some volatility in the market. So we need to be ready for that and watching. Again, I really don't think we'll go up and pierce this line. I could be wrong, but it's good to know what the market trend is. I want to be right about that, but I want to show you I'm continuing to make good trades and make profit, even when the market is doing something a little bit unexpected. Here's an example of a trade that we closed last week. This is the symbol's BIS. This is an ETF, biotech ETF on the Nasdaq. We got into this trade back here at 29.75, and then took profit on it here at 34.95. Took profit again up here just over 40, and then it ended up closing the trade down here in the high 30s. We made about 22% on this trade when we closed it out in a couple of weeks. So that's a good example of, we know what, I pay attention to the market trend, but there are still individual stocks that have really good technical patterns, and we're able to trade on them. Let me show you one more. Here's a trade that we are in right now. This is symbol LUV, Southwest Airlines. So we got in at this blue, this cyan colored line here at 40.57, and this thing's up, it's just taken off up currently at 45.23, and we think it's going all the way up here into the low 50s. So this is a great trade. Again, I'm going long on Southwest Airlines, even though I think there's an overall bearish market, because I think this one will counter the market and continue going up even if the market reverses. So again, my point I wanted to make is that it's important to pay attention to the larger market, but my specific investments in trade are based on individual charts, and we're still doing really, really good on that. Each week I've been giving an update on gold and oil, and I'll go ahead and do that too right now. So this is oil. Oil's in what's called a channel. It's moving between these two lines, pretty narrow range right here, and it'll break out of this range at some point in the future. Because of the long downtrend that we've had, there's a good chance that it could break up and go into what's a corrective wave and eventually head up into this area here. It really has to prove that it's going to do that, but there might be some really good profit to be made if oil does do that. So we'll continue to be watching oil and providing updates. There's no trade on this yet, nothing proven yet, but I'll give you updates on that every week. So this is gold, and gold is even a little bit more interesting than oil. Gold might have something going on here. It had a bottom. It's put in a series of higher lows, consolidated a little bit, then went in to put in a new high. Took out these previous highs here. It's pulling back now. If it can go take out this high right here, that's going to be some evidence that a real trend is underway in gold. It's probably going to depend on what comes out of the FOMC meeting on Wednesday, but gold could be interesting, and there could be some profit to be made on that. So I'll provide updates on that, but this one's getting close. This might be interesting, so stay tuned for gold. So that's it for this week. Again, I'm looking for the market to reverse sometime really soon here and not go through this red trend line that we highlighted earlier. Should be interesting. Lots of information coming out this week. Expect some volatility, and with your trades that you have in place, always use risk control. Always have your stops in place, and stay tuned. Send me your questions. I love answering questions from subscribers when they come in. That's it. Thanks, and we will talk to you next week.